The S&P 500 the last 5 years has returned about 10% per year. Buffett, Berkshire, over the last 5 years returned about 13, 14%, and a lot of hedge funds don't even get that high.
My guest today is Sean Tepper. Sean's the CEO and founder of Tykr, which helps investors buy and sell stocks with confidence. Sean, welcome to the podcast, and thanks for joining.
Well, thanks for the invite.
So can you introduce yourself and tell people a little bit about what your company does?
So I've been in tech for about 20 years and investing about 15 years. I built my first business in the 2000s. It was an agency just building software and websites for small and mid-sized businesses. In 2010, we did get an offer. It was pretty much a merger offer from a larger firm. And I wanted to get into something else at the point. It was a situation where all debts and liabilities were wiped clean. So that's a big lesson learned of building a service business. There's, in most cases, not really an exit multiple. So at that point, I decided, hey, let's figure out how to get money working for me as opposed to me working for money. I see the book behind you over your left shoulder, The 4-Hour Work Week. Big inspiration there. Thank you, Tim Ferriss. And I got into investing. And the issue was I would join platforms and there's not really a definitive decision like this is a great stock or no, this is not so great. And my broker at the time didn't really provide the metrics and analytics or even the education to give you the guidance on how to invest. So in 2015, I took a step back and I knew at that moment that hey, Warren Buffett and the late Charlie Munger were able to consistently beat the market. In fact, get this, Warren Buffett has said if he were managing $10 million, he could make 50% per year. And I was like, okay, that's a steep statement. And you and I both know that in order to do that, they're not gambling. They're not like using emotions or feelings to pick stocks, which means they're probably starting with some sort of mathematics. So I'm like, all right, I'm going to figure out what that math is. And I literally at that moment, I decided, let's read as many books as possible. I went down the YouTube rabbit hole and I found a guy by the name of Phil Town who he did provide some of the calculus in his books. His books are Rule 1 and Payback Time. I took the math, put it into Excel. I then used that the next 4 years with my own money and made returns between 15 and 50%. I was like, all right, I figured out how to do this. And the key was I had to create a rating system that was easy to understand. And I was asking the question at the time, hey, what's the easiest to understand rating system around the world? And I thought, you know what? The traffic light. Everybody kind of gets the whole green, yellow, red methodology. So in Tykr, stocks are either on sale, watch, or overpriced, which is green, gray, or red. So in seconds, you can make a great decision. And yeah, 19, I started sharing it with a few other people. And everybody's like, when are you going to turn this into a software to share with others? I was like, all right, green light, let's go forward with the SaaS. Took a year to build the first version, that MVP. And then it took a few years to find product market fit. We could talk about that in a minute. But yeah, fast forward to today, 5 years later, we now have over 13,000 customers in over 50 countries.
That's awesome. That's a great story. And for the layperson trying to make decisions, trying to simplify that decision-making process as much as possible, I think is a huge value add. So you don't necessarily come from the financial investment background originally, and you're also in the Midwest, which is not traditionally where you get like a FinTech SaaS startup. So what gave you the confidence to really say like, hey, I want to go all in this and make my own company out of it?
Good question. It is very contrarian. You're right. My background is not in finance, but that's, as I've been told, that's probably a good thing because finance, unfortunately, and I've got some friends that work in this industry, it's still a lot of overcomplication, looking at things like P to E ratio or P to B ratio or even market cap. And none of those things, to be honest with you, they don't even matter. Even Investopedia has articles written on P to E, high or low, can be good or bad. So how do you make a decision? Well, my background is primarily process engineering. Again, GE, Kohler. And what that means is you will run into a lot of complexities. You could have like 100 data points or 500 or 1,000. But the rule is you have to roll it up to something that's really easy to make a decision, ideally binary, or you can go like power of 3, like good, better, best, or a traffic light system. So that's why with Tykr, I was like, all right, so we have all these processes like we look at for full transparency in the Tykr calculations are all open source. That's one reason why we're unique from anybody else out there. However, we do have patents. But anyway, we look at 4 years of historical data on the financial statements, like that revenue, net income, EPS, free cash, and a few others. Well, it's like over 100 data points we're looking at. And sure, at a high level, it's complex, but I decided, hey, how do we gamify that and roll it up to that rating system of on sale, watch over price? It just made sense based on my process engineering background. So when you look at people in finance, do they or can they do process engineering? Maybe, but it's quite a stretch. But if you move the other direction from process to finance, it's actually really easy. And I was asking the question, is nobody else doing this? I literally was trying to break the internet, finding a system that made finding stocks easy, like with a rating system. Like I tried every platform out there. I'm like, you got to be kidding me. Like going back to when the vehicle first came, we made that transition and it's like people were apprehensive. It's like, nobody's going to replace my horse and buggy. And then you get to the vehicle, like, how did it take this long to get here? So it was that moment I decided, all right, nobody else is doing that. I'm doing it. And it seemed to be the perfect timing because retail investing is growing so fast. But if you rewind the clocks back 15 years, I don't think Tykr would have had the momentum. But fortunately, based on demand plus simplicity, it's now creating, it's not viral yet, but we're getting there.
It's funny. It seems like the most obvious thing looking back, but to your point, if you go back in that point in time and you talk to people, they might not have even thought it was a problem or a need. But it's interesting also, the other thing you mentioned, people who have a background in process engineering are way better at understanding kind of the theoretical data flows that are involved in like financial instruments because they've seen it, like they can draw a picture in their mind. So it's interesting that that's ended up being a superpower for you, I think.
Appreciate that.
If we go a little bit more into finding product market fit in that journey, what does that look like for you? I guess early on, there would seem to be a pull from people you would show it to, but beyond kind of your immediate network, how did you find initial customers?
Sure. Yeah. So I knew right away that there's a lot of people, retail investors already on YouTube. So I know that's a channel I have to tap into and I have to create content. We do have over 5,000 subscribers now. I didn't really put the pedal to the metal, if you will, with YouTube until about 2 years in, but I knew like, hey, there's got to be content there. That was one. Another avenue is SEO. It's not an overnight fix. That takes about 3 years. So I knew that was a long game, but that you pretty much want leads on autopilot. But my background, again, going back to Kohler and GE, they generate a lot of the revenue from channel partners. See, a lot of, you name your SaaS business and people think about, oh, I'll just run ads. It's like ads. It's very hard to be profitable to you, what is that LTV over CAC, to have a positive number there is actually pretty difficult. And I didn't want to even play that game because a lot of the projects I executed at Kohler and GE were with channel partners. That's where the big money is made with big business. And for example, at Kohler, they generate a significant amount of revenue through channel partners like Costco or Home Depot, or in the Midwest, you've got Menards. But it's like, yeah, you could play small business all day with ads, or you go a big business play. So I started aligning with other affiliates or channel partners that were aligned. They already have an audience of retail investors, and we give a kickback to that audience. Like, for example, I'll give you the raw numbers. We are 30% commission to our affiliates. And that's huge. Like, we're not charging them anything. They're not charging us anything. It's like we're aligned on the revenue. And if they share us with 100 people, 1,000 people, 10,000 people, it just scales infinitely from there. And that will always be our primary revenue generating source. But yeah, that was the plan up front. The issue was, and we can get into product market fit here, is when people subscribe, we had an issue where they would leave 2 months later or 3 months later. And you have to be really good. And this is like the first phase, I call it in a startup, is finding product market fit, getting that churn as low as possible. A great book out there that talks about this is T2 D3, triple 2 years, double 3 years, and they give an actual quantifiable metric of 5.75% per month. If you can get there, I know it's not a one size fits all, but if you get to that number or less per month, that's usually a good sign you found product market fit. So probably about 3 years ago, we're at 11%. 2 years ago, closer to 6%, but now over the last year, we are averaging about 3.8. In order to get there, you have to ask a lot of questions with your customers. A great book out there is The Mom Test. So don't ask questions like, what do you like or don't like about my platform? Ask what people are using today. Ask what they're paying for. Ask all the details about those platforms to keep your business out of the equation, because you can really find out why people are paying for other platforms. That allows you to get the product market fit a lot faster, shorten that timeline. So we do a lot of that and still do that. We'll, like in our churn sequence, we'll ask, what can we do better? What are you using today? If you're using other platforms, why do you use them? And when people start saying the same thing in the responses, that you can easily triangulate like, oh, okay, so we got to add XYZ feature. And the formula works. We've been able to see our churn reduce by simply listening to the customer.
Yeah, it's funny. In a lot of circles, people get super excited about different growth channels that is adding a lot to their funnel. And at the end of the day, if you have a leaky funnel, it doesn't matter, right? Like there's a lot of vanity metrics out there of how much you're getting new users, but are those users staying, right? And to your point, a good way of doing that is focusing on the problem and how they're solving the problem, as opposed to look at our features and what do you like about this? So it's great that, you dialed in on that, pretty early on. As you were going through that journey, were there any aha moments or things that you were hearing repeatedly that when you actually put it into practice, was like, oh, wow, that like had a meaningful impact on what we were doing?
Yeah, so pricing. And what I did is I created an Excel sheet of our competitors. I always believe in like come in a little higher and then you can always lower it. So we started at like $30 a month and like $250 a year, and it was too high for our base plan. So we went to like $19 a month, and then I think it was like $150 a year or something like that. It still wasn't there. We weren't getting the traction. And then I was listening to a podcast. I think it was Jason Cohen. He provided some tips on pricing, and he was like, there's something magical about the $99 a year plan. It's like low enough for most people to like add a credit card and almost like forget about it. And that number was part of the reason we had a decrease, I should say, from 11% churn down to about 6. So we went to, it was $15 a month or $99 a year, and we're kind of locked in. You get about a 30% discount, but we don't advertise it as such. We found that when you use a percentage discount that doesn't move the needle, you have to let people know like how much dollars they're saving or how many months they get for free. So we advertise it as 3 months free, give or take, but that seems to get people's attention a little better at the yearly plan, $99, and they're in. And it's been pretty low friction, and that's been one of the big plays we made that made a big difference pretty quickly.
Yeah, I think you're 100% right. I like to also dive a little bit deeper in the affiliate marketing channel. Obviously, there's a lot of different types of ways you can leverage affiliates in different markets, like micro influencers and different areas. I guess, are there any areas that have been like really meaningful for you that you've experimented with over time?
Yeah, so you mentioned the micro influencers. Definitely influencers that is one channel or category we look at for affiliates. And that's been a little easier. Of course, the bigger you go, if you get to affiliates that are like closer to 1 million subscribers on YouTube or Instagram or whatever, what they're typically going to do is require an upfront fee or even only flat fee. They don't do a rev share. They kind of have the high ground in the conversation. So that's why they do that. But the smaller affiliates, they're all on board for a rev share. So that's one channel. The next would be FinTechs, which any other financial platform that serves retail investors. And there could be examples could be like portfolio tracking tools or budgeting tools or savings platforms or you name it. They're everywhere. That's a great mix because they already have the audience and we'll do rev share with them. And then the third category, and this took 5 years to get here, which is brokers. That's kind of like the top of the food chain. They have the most retail investors all in one location. And because of our product maturity and our data, that's the key thing. The two big pain points at the broker level. And this is a key takeaway for anybody out there looking to do channel partner sales, especially if you're going after big players. You have to find out what are their biggest pain points and then show the data and how you're removing or reducing those pains. So on the broker side, they have two main issues. One is transactions. They have a lack of transactions. People will literally join like a Robinhood or Webull or Moomoo, and they will sit. They'll sit for 3 months, 6 months, 9 months. They won't make any transactions. And I had a broker 2 years ago that put me on this path that was like we all call them tire kickers. It's the name we call retail investors because they join and sit. And this guy was like, you have to figure out a way on how to create transaction lift. So it took 2 years since, but now we're showing that our customers typically make 20% more transactions per month, whereas our competitors, it's maybe between 1 and 5 at best. The second thing is account sizes. Get this, a lot of these brokers, the average account size is like between $5,000 and $7,000. At Tykr, it's over $20,000. And they make brokers, even though they're free, but they make money based on transactions. And then account size is just a stickier situation. So we go to brokers and we just get down to brass tacks and we show them those data points. And that creates the urgency to be like, okay, we need your help to increase transactions. But again, it took 5 years to get to product maturity. Our tech stack is further enough along to handle the scalability and the data on top of it. So now we can secure those big players. It takes a minute to get there.
That's super interesting because you find the pain points, and once you have the data to back it up, it's hard to argue with that. Speaking a little bit about customers and why they stay, it's one thing to have a strategy that one person uses that's helpful. It sounds like from the data that you've been able to amass as a part of Tykr and some of the strategies you employ, that it's working for a wider audience. I guess, can you talk a little bit about what the returns look like to someone that's an investor that leverages Tykr?
Oh gosh, yeah, we've got an analytics feature that it's not only for brokers but for retail investors, so they can see and get this. The S&P 500, the last 5 years has returned about 10% per year. It's usually about 8 to 10. Buffett, Berkshire, I believe last time I checked over the last 5 years, returned about 13, 14%. And a lot of hedge funds don't even get that high. Tykr's audience typically ranges between 15 and 20% per year over the last 5 years. So we are literally, I can't say absolutes, but we do beat the S&P for sure and most hedge funds. And it's simply by finding 10 to 15 strong value stocks. This is not trading, it's investing. And then you're buying and then buying more is the rule. And Motley Fool teaches the same thing. You want to be a net buyer. We're not about buying and selling. Again, buy and buy more, buy and buy more. You want to be investing every month. But yeah, those are the returns. And this dashboard will show in real time, not only the returns, but how much money people are making. And I think the number I saw is if people are paying $99 a year, they're usually making $4,000 a year. So it's like, and again, no guarantees, but it's juxtaposing like, oh, okay, so this is not Netflix, because people compare every once in a while, like, you're like the same price as Netflix. I'm like, does Netflix make you money? No.
Completely. So obviously, since you started even doing this personally, or even started this as kind of a SaaS, things have changed pretty dramatically from a technological perspective. Obviously, there's a lot of AI solutions that are popping up everywhere, even trading strategies, some may be more nefarious and not as reputable as others. What are you seeing in the industry right now?
So I kind of saw this coming with AI, and I warned our customers on this. It's kind of like the .com bubble. Like people literally slap .com on their name between like 1995 and 2000, and oh, we got a new online business here. Well, everybody's desensitized to AI. In fact, I was at a conference the last few days in Indianapolis, and a few of us were joking around about it. We're actually doing a tally of how many times AI is mentioned in the presentations, and good thing we weren't playing a drinking game because we'd all be on the floor. What does AI actually do? So we actually use AI. We have a patent on a process, but we don't lead with that because nobody cares. But we got a tool called the M Confidence Booster. I'll just give you the 4 M's now. You got the math part, which is everything rolled up and calculated immediately in Tykr. Then you get the meaning. This is probably where you're good at because your management consulting background is you're looking at a business. How does a business make money? How scalable is the business? How many revenue streams does a business have? That's, again, the meaning. Then you have the moat. How does a business compare to other businesses in the same sector and industry? And then the last M is the management. Doing homework on those last three, that could take you hours, if not days of research. We use OpenAI. This took 6 months of prompt engineering, but it reduces it down to seconds. You can literally log in, you can see the scores, and if you can get an 80 or higher out of 100 on the 4M, that's very hard to do. That's like a high confidence rating in the stock. So it's like join Tykr, increase confidence, get better returns, of course, no guarantees. And we do have this one tool here that can add another layer of confidence. And that approach there, that is, in my opinion, it'll sustain longer than, of course, businesses leading with, hey, we're an AI business and we're powered by AI.
Yeah, everything's AI, or now everything's slapping agentic workflows on everything. So I completely agree. To your point, like, it is a technology, it is a tool. How do you use a tool to help you achieve an outcome? It's the outcome that's the most important, right? So yeah, I completely agree with you. I guess, what is something, since you've been on this journey, that has been a bit surprising to you that you weren't expecting going in, and that can be positive or negative?
Not any massive gotchas, but the thing that it was a little frustrating, but now I get it in hindsight, which is securing a lot of channel partners, like bigger channel partners. It did take 5 years. Like I was expecting to kind of get there at about 2.5, 3, but the maturity of our platform, the lack of data, it just really wasn't there. And thank God for that timing, because I look back, and if I really would have been trying to force doors open with my 2.5-year-old platform, I probably would have got a lot of no's, and then trying to go back and get a yes, as you know, that's very hard to do. So I started small with channel partners, and if I couldn't open those doors, I didn't even bother with the big players. It's like, I got to be prime time ready. And so, yeah, it took 5 years. And as soon as I started seeing these smaller fintechs, immediate yes, I would work my way up to bigger players. I was getting immediate yeses. And now finally at the broker level, I'm getting the immediate yeses. But yeah, I could have probably tarnished that experience on a sales side if I went too early. It's a really good lesson learned for entrepreneurs building a product is, start with the smaller channel partners first and then work your way up, because you don't want to come out of the gates and go for like a Walmarts of the world or Targets or Fidelities. You pick your industry, but you kill a opportunity. Getting that door open again it's next to impossible.
100%. Having worked with some big companies, once they make a decision on how they think about you, it's very hard to change that internal cultural psychology of the view. No matter how much better tangibly you actually are, they're going to be stuck in that mode for a while, and it makes it a lot harder moat to climb over. So completely agree. But it sounds like, things are heading up and to the right. You've explored a bunch of different kind of channels and partnerships, and you're getting those moving. I guess, what's frustrating for you right now?
One thing over the last few years, I've had a very hard time finding salespeople or marketing people that can do sales. And I really found like you can't convert, you can't jump over, you need a salesperson, you need a salesperson. And at this event over the last few days, I had an aha moment. And there's a gentleman that got up and said, if you're looking for a salesperson, you actually want to go for somebody who's green and is willing to learn, especially if it's a position where you have to make a lot of outreach. I had hired and fired 4 people that they will literally make calls for 2 weeks. They will get bored, and then they want to talk about their ideas and how they can make Tykr for them, or they'll talk about, let's switch our CRM, or let's upgrade your website. There was one dude over the last few days, he's like, find somebody who's young, green, and motivated, because the older sales guy with a lot of experience, and sales woman as well, they will do a lower volume. They will start coming up with their own strategies, their own ideas, and they're just, it's way too slow. You're not going to move the needle. They're just going to waste your time. So I was like, that makes perfect sense. So that's one pain point. The other has been raising capital we actually found a lot more success with angels. Actually, everybody who's invested in Tykr so far in our seed round, they're customers already. They're already bought in. But when we pitch VCs, it's been striking out 100%. Now, given we have secured a few brokers here, so that'll create leverage. But prior to that, they're like, nah, we're not interested. You're a B2C play. I'm like, yeah, we're B2C. However, the majority of our sales are B2B2C, similar to like a Kohler or GE has their divisions, which are B2B2C. But anyway, yeah, that's been another challenge as well. But at the end of the day, it's like, we're raising money from the right people because, as you know, you raise from the wrong firm, wrong person, they can be a headache because they're attached to your business now.
Yeah, it's like getting married, but from a business perspective, if you get married to someone with different incentives or a different idea in their head of what they want the company to be, like it's so hard to get them out once they're entrenched, or to like avoid that influencing the way that you're trying to move the organization. And I do think it's a salient point to, especially if you have kind of a repeatable and effective sales process, to get someone that's green and hungry, because they will take the time to learn what you're doing. They want to get better, right? Sales is a skill, but it does need to change based on the individual circumstances and kind of approach and ecosystem of a company. So it's not just as easy as a rinse and repeat as some people would want it to be. From a fundraising perspective, what types of things would you want to invest capital in? Let's say, you click your hands and all of a sudden you got all the funding you wanted.
So right now, the big things we're working on are, I want to expand our engineering team because some of these integrations with other fintechs, they require an engineering effort. It's like sometimes putting the Tykr app, whether it's the mobile app or web app, into their ecosystem, and there's API integrations. And we're starting to get a few of these partners, and I've got a backlog. That's like immediate ROI. Like once those are connected, we're generating revenue month over month over month. So that's one. Two is some of the features we're adding to Tykr. So one big one was we added broker connections. So you can connect your broker to Tykr. We got about 25 brokers in the ecosystem. Robinhood, E-Trade, Schwab, Fidelity are some of the big players. So now your portfolio tracker is automatically updated. Another feature I'm going to add, and a lot of people are kind of going crazy about this one, is a community feature where you can join. I can follow you, Nabil. I can see what stocks you hold. I can get notified when you buy and sell stocks. Like people are like, I want that like right now. It's on our backlog as well. Another feature is we want to gamify Tykr even more with a point system. I've been studying video games, and the usage can be significantly higher if you're rewarding people with points based on good behavior. For example, in Tykr, we want to do a point system. Like if you're buying and holding every month, especially the same stock, that's a really good sign. Also, if the market goes down, we call that stockpiling. That's the number one most important strategy is your on sale stocks fall, not because there's something wrong with the business. It's because the market pulls everything down. COVID was a good example of this. Great time to buy. If you buy when everything's going down, that shows you're fearless, and that's where you make the big returns. You earn big points on that. And we're going to have a leaderboard who has the most points for the week, for the month, and see where I fall, competing against others. Like we got a year-long backlog at this point. I could compress to about 6 months, if not less, if I can raise more capital.
Yeah. If like a Peloton could make exercising fun by some gamification and competition. Not everybody, likes to get on a bike and hurts. I definitely could see that making a huge impact on influencing behavior and habits.
Yeah.
So what are you now focusing most of your time on as the leader of the company?
So I'll kind of give you a layout of my day. I typically start each day after getting back from the gym. I will immediately customer service, and that's like 30 minutes a day of like checking emails. We have a high trust pilot. A quick pro tip here for the listeners. People won't necessarily give you high ratings based on your platform, but they will give you ratings based on your customer service. So, and that you can control without any tech. So try to be really responsive. I don't check emails on weekends, but Monday through Friday, it's like try to be responsive, respond to every email you can, and try to treat people like humans. Don't treat them like a corporate email. So I'll use language like you bet, keep up the good work, you're doing great, thank you for joining, always be gracious. Then after that, it's probably another half hour to an hour focused on engineering. So whether I'm architecting an idea or giving feedback on a feature or beta testing, that is very time consuming. That can take an hour per day per se. And then the rest of the time is focused on sales. Like it's literally right now, the channel partner relationships going through. We've got so many in process on where we at in the pipeline. In fact, I'm kind of setting up HubSpot right now to organize different stages and where everybody's at to keep track of everything. And then there's fundraising. I'm probably only spending about 5% of the time now because fortunately we're raising money from our current audience. But I want people who already bought in on Tykr. That's a lot easier effort to raise money than pitching this VC, that VC, that VC. It's a pain. So it's kind of like the breakdown of where I apply my time. Sales and marketing is probably 80% of my.
Yeah, I like just knocking the customer service stuff out right off the bat, getting a response in, being informal and a bit more personal, like little stuff like that makes such a big difference. And I think it's evident in the Trustpilot score and some of the rating scores that you guys have. I guess as you look to the future and as we kind of wrap up here, what's something that you're most excited about?
Yeah, I would say these partnerships. That's something I'm super passionate with and I look at the companies I worked in the past, like for example, Kohler, I think, and I don't, this is not a dead on number, but they have like 10,000 affiliates. And in that world, okay, so you've got your small mom and pop plumbing shops on up to the Home Depots, the Costco's, the Menards of the world. And I'm looking at Tykr the same way. Like I want to be like the utility other fintechs and brokers look at like you. It's not a want to have, Tykr is a need to have. If you want more transactions, you want more engagement, you want bigger account sizes, we are the solution. And just focus on that. Do good work for each and every one. Provide a gracious experience the whole way. I see that, not just a short flash in the pan over the next year, but well into the future. I mean, that is the future of Tykr, and that's where it will always be. In other words, you treat your customers well. That's a key, but treat your partners well. That's especially critical.
Yeah, no, I think people underestimate that. They see it as like a means to an end, right? And the more you can treat them like real partners, like you would treat a partner and personally, I think that has huge impact. Well, Sean, where can people find more about Tykr or what you're doing?
Sure. Yeah. I try to keep it easy. 2 locations. One is go to tykr.com, Tykr.com. And then the other location is LinkedIn. I'm very active on LinkedIn. And Sean is spelled the Sean Connery way.
Sean Connery. Really enjoyed the conversation and appreciate the time and look forward to speaking in the future.
Thanks, Nabil.